Okay, hi guys, welcome to the part 2 of our introductory video to Forex for beginners. In our first video, we gave you a walkthrough of the trading view interface and what it looks like and how you can go about analyzing or looking at the position of the market. So in this second video, we'll be looking at market structure and how we analyze the market properly. So let's say, for instance, this is basically top-down analysis. So we are moving quickly to the meat of forex trading and how we can start making good entries and positions in the market. So for this particular session, I'll be doing a carrying out a top-down analysis. Let me quickly just a second. Let me quickly bring out the tools that I'll be using. Yeah, I want to be using this tool and yeah, this rectangle tool. So that's the tool I'll be using for now. And also I will not okay, I won't be including trend line for now. Maybe the trend line part I'll explain it with my own chart. So look at this market. We are on GBP USD. GBP is Great British Pounds and United States dollar. So this is a monthly time frame. Here you have all the time frame. Here you have all the tools. Here you have the different market watch lists that you've selected. This is where you look at the price. Here you have where like the price charts plotted against the year. So in 2022, the market was here. In 2026, in 2006, sorry, 2026. In 2006, the market was currently here. So basically, this is the what am I missing any other thing there? I think that's just the fundamental of it. Here you can add your indicators. So let me just, for purpose of this tutorial, I'll be adding moving average. Moving average. This is like the moving average exponential. Oh, this thing is always prompting me to join. I really don't want to join because I want to remain on I don't want to join because I want to remain incognito on this side, because once I log in it will take me to my own chat, which is not really what I want. But okay, so I think we should just move on without the moving averages for now. I'll explain it on my own side, on my own chart. So this is a monthly time frame. Basically, you don't really need, I don't want to say basically again, guys. I think I say basically a lot. I won't say it again, promise. So we have the monthly time frame. The market is moving this way, moving that way, moving this way, moving that way. So the three most important conditions, if the market is moving in this direction, you see this upward direction, it's safe to say that the market is in an uptrend. It's in an uptrend, and it will be marked by this trend line. Guys, this is the most important lesson you should take in forex. This is the most important lesson. Once you can know this, you understand. So this is like a rough uptrend. It's not perfect, but this is an uptrend. Um, if the market is moving sideways, it is said that the market is ranging. As you can see, there is no clear direction. The market is, remember, this is monthly and we're on top down analysis here. So this is the market is just moving, it's ranging, not necessarily moving in any direction. Let me move forward instead of backward, please. So if the market is um just give me a second. Yeah, let me just I'll drop down very soon. I'm just trying to explain the concept of uptrend, downtrend, and rearranging markets. So if the market is moving in this direction, it's said that the market is in a downtrend. So this market is in a downtrend, signified by the market making lower lows. So this is a high, it drops to this place a low, it goes to a lower high. So this high is lower than this previous high, it drops again to another low. This low is lower than the former low. So it moves like this. Let me see if I can see any drawing tool. Yeah, I don't want to really. click much here so that they don't keep moving me to the page where I'll be prompted to sign in. So you see that the market is making lower highs and lower lows. So this is a downtrend. So I've given you the three conditions, like the three, yeah. So let me just put it in one screen. So this is a downtrend. This is a ranging market. This is an uptrending market. This is also a ranging market. So these are like the different phases of the market over the past how many years? This is 2000, 2000. Now this is monthly. Remember, monthly. Now, in top-down analysis, you're supposed to pick out the resistance and supports of the market. So the hope I'm recording. Hope I'm recording. Hope I'm recording. Shit, I'm not recording. Okay, I'm recording. I almost lost my mind. Okay, I'm recording. I just had this funny feeling that I did not hit record. Now, remember, what we are looking for is to understand the movement of the market so that we can use it to predict a future move of the market based on previous moves. So let's mark out the supports and resistance of the market. So if the market fails to break a particular, I'm trying to get this into a proper zoom level. We don't really need to go back to 1999, guys. Now, if the market fails to break a particular low over time, that becomes a support. So we can analyze that by picking out our rectangle, using our rectangle to pick a rough area where the market is actually, sorry guys, I think I pressed something that I'm not supposed to press. So this is a support that we've identified from a previous level. So that I think 2001 is okay. So this is the first time we touch here. There's another touch, there's another touch. So this is a strong support that we've already figured out. Now we go to the next support, like the next key level. Let's call them key level because they can be support, they can be resistances, so they are key levels. So you see that this market was actually using this zone as a support, and then when it broke below it, the zone became a resistance. So the market was not failing to break above it. We can acknowledge this level, but I feel like this is, come on now. I don't want to join. This guy is making me go back. Guys, please pardon me. I don't know why he keeps doing that. I really don't want to analyze from my own charts, because if I do that, that will mean that we already had on that other page, we've already done a lot of analysis, so it will be somehow to skip, and that's the one I use as my actual. And so let's just move quickly though. So I believe you understand the concept by now. So we are picking out key levels in the market. So support, resistance, support, resistances. So this is another support. So let's just add a few more levels. We don't need to go crazy, including so many. So I think, yeah, this, remember, this is monthly. So most of these small movements you're seeing here constitutes, like from here to around here is about 900 pips. So those those movements, and they're not small at all. They're not small. Guys, I'm supposed to be going to the gym very soon. Oh, I'll just have to rush this. So now we've been able to identify key levels here. We have the resistance, we have the support. Now, most times, anytime a resistance is broken, or anytime a support is broken, it might come back. When it comes back to that level, it might likely become a resistance. So it's not, there is no rule that says once it comes back to that level, it must be a resistance, but it is likely to become a resistance in the future. Also, vice versa, if a resistance is broken, it's most likely to become a support later. So yeah. So this is, we're also, remember, we're also doing our top down analysis. So let me drop down to the weekly. So you can see those key levels that were pointed out. You can see how they are being respected in the market because we've already identified. Imagine you had identified this key level, and then when it comes back to this point, you already know that there's a likely resistance here, and this is an M formation, so you know that this market is definitely not breaking here. So you enter for a sell, and then the market moves down. So this is a top down analysis. Remember, it is weekly. We analyze from the monthly down to the weekly down to the daily. But when we want to enter our trades around our key levels, we enter from a lower time frame. Let's say 4 hours to 1 hour, as the case may be. So we always enter from a lower time frame. Sorry, I'm trying to zoom in so that the market will not be too. So see that same position. We're entering from a lower time frame. So if you're going for a sell now, you would have entered the sell from this lower time frame, which is H4. Remember, the market moves in hundreds of pip at a time. So most times when you zoom in like this, you're still going to be making enough reasonable pip. So let's say, for instance, you had even entered the market from here, which is 177, down to 1.418. So let's say you even get down to this point. This is almost around 200 pips from here. So if you had entered with a 0.01, so you've already made like $20. So most times the smaller ranges will also give you some considerable amount, especially for GBP pairs that swings a lot. So what else should I be adding here now? So basically, this is how we. I said I will not say basically. I'm sorry, guys. Forgive me. So this is how we do the top-down analysis. Now, remember, we've identified the key level, but remember the trend lines are also important. So if a market is downtrend, is going having like is moving as a down, is in a downtrend. A downtrend is guided by trend lines. Like you cannot create a trend channel using that same trend line of the market. So let's say, for instance, something like this. Um, so this lower trend is guiding this uptrend. So it's there. Of course, there might be manipulations around this trend line from time to time, but it gives you a rough range of how the market will move in the future. So anytime it comes closer to this point, you'll be expecting that this is key a key area of value. So similarly here in this uptrend, the trend line will guide the movement of the market. So if I put the trend line below and above, it forms what is known as a trend channel. So you see, now in this trend channel, guys, it's important to note that the market will most likely, like if you want to enter for a buy, I hate when this thing is doing this. If you want to enter for a buy, uh I really don't want to sign. Is there no way we can close this notification? There's really no way. I really don't want to join now. So, but guys, you get the concept. Okay. What I'll do, let's just go back to my own chart and use my own to explain. So, let's go. We're actually on a GBP USD pair. As you can see, this is where I do my own actual analysis, and it's a bit rough. But see what I was explaining to you guys, that you have these trend lines guiding the market on the downtrend. Let me go down. Let me drop down to the daily. This one is guiding the market on this downtrend. These are the key levels. But remember, when you drop down, the more you drop down, okay, so a key level is being respected here already. You see the way the market got to that point, has broken out of this trend line and most likely to go down this way. So this is basically how it moves. So this is an uptrending line, a downtrending line. You're looking for entries here, and anytime it touches the lower trend line, but now it has broken out of the trend line, which forms what is known as the breakout. So I think there is a sell opportunity on GBP USD, but then again, today is Friday, so it might not be the best time to enter a trade. The markets, the sessions have closed. So this is basically the thought. Basically, I said. So this is all about the market analysis, top-down analysis. So if you notice, what is different in this one is that I've included a trend line. Sorry, I've included a moving average, which is these two lines you're seeing here, an exponential moving average. This forms an additional confluence for when I want to enter a trade. Um, I will, over the next video, we'll look at how to enter trades and how to place your stop loss and all those other good stuff. All right, thank you. This video is now 15 minutes. I really don't want it to be longer than this. Thank you.